and welcome back to Broader Financial Future. To all my future millionaires and billionaires out there, hopefully you're having an amazing day so far. In today's video, I'm going to discuss a high yield dividend REIT, ticker NRZ. But before we get started, make sure you hit that subscribe button if you haven't done so already, and smash the like button. All right, let's just jump into today's video. All right. So the company I'm going to talk about is New Residential Investment Corp, ticker NRZ. Now, this is in the real estate sector, specifically the REIT industry. Now, this company has a market cap of $5 billion. So it's a smaller company with a trailing PE of 7.93. So to give you everyone a little bit more details about this company, it's a real estate investment trust focusing on investing in and managing residential mortgage related assets in the United States. It operates through five segments: origination, servicing, MSR related investments, residential securities, and loans and consumer loans. So that's what you're getting with this particular REIT stock. Now, they recently announced an acquisition that was completed with Genesis Capital LLC, a leading business purpose lender, along with a related portfolio of loans from affiliates of the Goldman Sachs Group, Inc. The transaction was initially announced on October 11th of 2021. So this is we have a quote here. The closing of the Genesis acquisition adds another complementary operating company to New Residential's portfolio of investments, said Michael Nierenberg, Chairman Chief Executive Officer of NRZ. So they just recently made an acquisition, so they're definitely trying to build their portfolio. But let's take a deeper dive into how they make money. So here's a breakdown of their portfolio. It has 29% origination, 29% servicing, and then 22% MSR and service advances, 12% in residential securities and call rights, and 7% in residential loans, and only 1% in consumer loans. So these are the segments where they really generate their business. So this is a breakdown of the overall portfolio that they have to offer. Speaking of, let's talk about their management for a brief moment before we get into the dividend. So, Michael Nierenberg is the chairman of the board and chief executive officer and president. He was appointed the chairman of the board in May 2016 and chief executive officer and president in November of 2013. He definitely has a lot of experience when it comes to this space, working in other companies prior to NRZ. Now, when it comes to Nick Santoro, as their chief financial officer and chief accounting officer, Mr. Santoro was previously employed by FXCM Inc. from 2012 through September 2015, serving as its chief accounting officer. So those are management that they have there. Definitely, Nuremberg has a little bit more experience. You can definitely look up what he's done in his past as well to kind of see the financial world he comes from. All right, I just want to talk about the management real quick. All right, so when it comes to their dividend payout, they pay out a dividend of 62.96%. That's their dividend payout ratio. That's not what they're paying us specifically, but that's their dividend payout ratio. They have a dividend yield of 8.59%. They pay a quarterly dividend of 25 cents. So I do want to break down a dividend even further. I've owned this company for a while. When I first started investing in this company, it was prior to 2020. So in January of 2020, they paid a 50-cent dividend. I was new to stocks, and I was looking at the dividend yield. It was a nice dividend yield for the time. So I owned a lot of the stock. So I paid 50 cents a dividend, which dropped to, everybody knows 2020 was a horrible year for stocks, but it really depends on when you started investing, right? If you were investing prior to March of 2020 and you seen your money drop, it was horrible for you. But if you start investing in March or April, like a lot of people start investing, it was a gold mine. You were just picking up things pennies on a dollar. So timing is everything. You can't really time the market, but just because it's bad for someone doesn't mean it's not good for someone else when it comes to stocks. So the dividend dropped to 5 cents due to the pandemic in May of 2020, but at least they continue to pay a dividend, which some companies completely gutted their dividend or stopped paying a dividend overall, like Disney kind of suspended their dividend. I don't even know if they even start paying a dividend. That's the company I own as well. Um, so that's something to keep aware of. But since then, it continued to raise its dividend to 25 cents. So still below the 50 cents that it used to pay, but at least it's heading towards the right direction. It didn't keep it low. It just continued to kind of raise it over time. So it's steadily increasing their dividend. Um, they've been steadily increasing their dividends since that time, which I think is a positive when it comes to this particular stock. Now, it does have a credit rating of B1, which is stable, which is okay. When you look at the stock moving average, its 50-day moving average is $11.22, which is below a stock price. Uh, it is trading slightly above its 200-day moving average and slightly below its 52-week high of $11.81 and a little bit more of its low of $8.98. Now, when we look at the stock here, the stock it is trading, if you look at the past month, it is trading like around 3% lower. But if you look at the past year, it's almost up 10%. But if you look at the 5-year mark, the stock is down about 32%. And you can really see in 2000 that dip if you look at the 5-year chart. Because basically it was doing all right, it was kind of going up and down, but really in 2020, it took a huge dip, like a lot of stocks in this space in the market as well. But this one hasn't fully recovered yet to what it was prior to March of 2020. So that's one thing to keep a look at on stocks like these. So overall, Yahoo has a price target of $12.80, which is around 18. It has like a 18%, but potentially, or around 9% from its all-time high. Uh, Potentially, when you're looking at this particular stock, I already own this stock. I do plan on holding this stock. I don't plan on selling it or getting rid of it anytime soon, unless something changes. I like this stock at around $9 or 9.50. Right now, I'm going to continue to hold. I'm going to hold my current shares. I might buy one here or there depending on what happens with the price. But currently, I'm going to add this to my watch list. Just make sure if it drops around that price, to continue to take a look at it. But I do enjoy its dividends. I use the dividends to buy other things at the moment. I think it's a nice size dividend. But this is definitely a stock that I own. And just a quick disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only, and any investment may involve risks. As you can see, when I show you that big dip, I was holding this company prior to 2020, and I'm still holding it now. So you can see the stock market can kind of fluctuate as I share my experience with this particular company and stock. So make sure to subscribe, like, and comment. Let me know, do you own this particular stock? If so, when did you buy it? Did you own it? Did you buy it after during the dip? What are your plans for the company? Are you considering buying it? I think it's for me, I consider it a hold. I think it's some buying opportunities depending on the price of the day or where it fluctuates at. I still like MPW slightly more, and that's another company that I own, which I'll link maybe somewhere in the video where you can check that out as well. Well, that's all I got for everybody. Until next time, everyone, have a good one. I'm out. Peace.